Hey guys, Akil Stokes here. Want to pop in real quick and give a little bit of a mid-week trading idea. My apologies if I sound a little bit winded. Just got back from a bike ride training for this Ironman deal, but wanted to come to you on the Aussie Canada for a few reasons. One, if you've been following the videos that I've been putting out, we've been talking a lot about trend continuation trades. I do have another really big one that's on the radar, but we'll probably wait until at least after tomorrow to talk about it after we see the whole ECB thing happens. So I wanted to talk a little bit about a counter trend trading opportunity as well. And this is kind of the style that I started off with when I first started trading, when I first started getting good at trading, before kind of evolving into adding more, I guess, tools to the toolkit. But what we're looking for here is first and foremost a key level of structure. And one of the easiest ways to identify key levels of structure is just draw out the ebbs and flows of price action, something that we teach our traders very early on in the process when we start working for them is learn to read price action before you need to worry about candlestick combinations, before you need to worry about indicators or different patterns, advanced or classical or whatnot. Learn how to read price, because once you can learn price, then you can identify structure. Once you can identify structure, then you know the key levels of the market to pay attention to. And once you can understand the key levels of the market to pay attention to, you can then make the right directional predictions. And then you can add on the fancy individual patterns or combinations that you want to use to get involved in the trade. So, and it's not an easy process drawing the ebbs and flows. It's a skill. So it has to be trained. So don't expect to kind of go out there on day one and just do it correctly. And your eyes will change and adapt over time like any other skill, but you want to make it a consistent habit. So like what we've been talking about in the most recent episodes of the Trading Coach podcast, where you really have to train and treat this like a sport. But measuring out the ebbs and flows, I'm going to draw them on really quickly for you, and then you'll kind of get an idea where you can, the important levels should stand out for you, right? So we have ebbs and flows and ebbs and flows, and market does this little dance. This is how markets move. We go down, we go up, we go down, we do little tests and stuff like that, and we go down, and then we go up here, then we go down, and we a little off on that one, but you guys get the point. And the question I want to ask myself is, okay, so we're on another wave down right here. Where is the next point that we're likely to go to? And I want you to pause this tape if you can, and try to guess or try to identify, where do you think is a very important part in the market? Where is a level in the market that price action has reacted and respected in the past? I'll give you a clue. It's reacted and respected it on both sides, right, as support and resistance. So pause the tape if you don't want to get this answer spoiled. If you're ready, look at this level right here, right? Can you see how price action has used this as resistance, 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 right? We came back underneath it, broke beneath it, and then came back and had a little test as support before breaking above, and then boom, came to support again. We also have an even handled number there in the form of 89 cent, right? Even handled numbers are psychological numbers. Why? Because us as human beings, it's very easy for us to identify. And this is going to be a key level that price can come to. So if we're looking for the end, the termination of this current extension and a chance to maybe catch a little bit of relief, well, this is a perfect place to look for the neckline of a previous head and shoulders pattern. So can we add any more confluence there? Because yeah, it's one thing to have this structure there, but as traders and analysts, right, we are detectives in the market. We are lawyers, I guess you can say, and the more clues we have, the better. So this is where I can use kind of the clues and all the stuff you see me do in my normal analysis to kind of add confirmation to this opportunity. So let's take this leg right here, and we're going to just copy and paste it, right? We'll make this an equal measured move, right? This is called an AB equals CD pattern. And lo and behold, an AB equals CD pattern completion is going to be right at that same level of structure. And again, in real life, these structure levels are zones, so not an individual point, right? What can I add to that? Well, I can take my Fibonacci extension. I can go swing high to swing low, to A move to the B move and back up. And you can see, let me draw that on again. I think I'm a little bit off there, but you'll see a 1618 Fibonacci extension on that level as well. Let me just draw that on because I tend to rush these things. So we already did it this morning, but let me do it one more time just so it's crisp for you. Boom, swing high to swing low and back up. And you can see a 1618 Fibonacci right inside that zone. So we have confluence here. Now you may ask ask yourself, or maybe asking yourself, how do I kind of make sense of all this confluence? Well, this is where the CTS system comes in handy. And the CTS system stands for Combined Technical Scoring System. It is a system that my trading mentor taught me as basically a way to quantify what we're seeing in the markets and to become consistent with what we're seeing in the markets, right? It's one thing to see the same thing each and every day and know what value you give it. It's another thing to kind of look for random things each and every day in the market, right? And you kind of know my saying, right? Consistent analysis plus consistent execution equals consistent results. So if you're inconsistent in what you're looking for, meaning what you value on the chart, you're going to have inconsistent trade entries and you're not going to be executing an edge and whatnot. So what we want to do is we want to be consistent in what we look for and put that in our CTS checklist. We also want to assign it a value. What's important? What's more important? What's less important? And then once we do that, we can add up a score. And if a score meets our specific requirements for what we need, we can enter a position or enter a half position or a quarter position, however you want to kind of customize that deal. But if we're looking at CTS elements in this trading opportunity, we have a major structure level, that's boom. We have an AB equals CD pattern, right? Boom, boom. We have Fibonacci extension, boom. We have RSI oversold, boom. We have 4 things right now, and we may have more double bottom diversions, who knows what, if price were to get down there. So we're already kind of organizing our score. And before price gets to that point, we're trying to make the decision, hey, is this a level in which I have enough to enter a trade at? And if so, what do I need to enter at that zone? So keep an eye on 89 even, that 89 even-ish zone for potential buying opportunity on Aussie Canada. And as always, if you have any questions or comments, feel free to leave them below. I do read each and every one. I respond to each and every one. And do me a favor, hit that like button, that rocket ship button, whatever you can do to support this video. That way I am motivated to keep them coming every week because I do get lazy. I'm pretty consistent with the weekend trading edge video on YouTube, but with the trading view ones, I tend to get lazy because, I do analysis all morning and then the last thing I want to do is do another video. But as long as I'm getting the likes, as long as I'm getting positive feedback, and I know people are watching this, I'll keep them coming. All right. Be careful out there. ECB tomorrow. And until next time, plan your trade, trade your plan. Take care.